Good morning, ladies and gentlemen. You're now tuned into the Pulse Wave Report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous Pulse Wave Price Trigger Reports. And if you go and head on over to PulseWaveTrading.com, you will see that we're running a special 14-day free trial that has been ongoing, and it will make a great stocking stuffer for you to give to a friend or family member to help change their financial lives for the better. Start the new year off right and on the right track with the Pulse Wave reports, available at pulsewavetrading.com. It's been a while since I've done a midday live report. There are many reasons for this. Primarily, the ultimate reason is because I have been extremely busy behind the scenes. It takes a lot of time and energy and effort when it comes to running the Pulse Wave price trigger reports for you guys. And that's because we're dealing with thousands of reports on thousands of securities, multiple, asset classes, from stocks to futures to Forex to crypto. And it is a time consuming endeavor. And to top it all off, I'm actively trading because that's how I make my living. So I don't always have time to do these podcast reports. But when I do get the time to do them, I want to be able to do it. Lord willing, in the not too distant future, I'll be able to do it on a more regular basis. One thing that has prompted me to temporarily jump outside of the lab and to do this podcast is because there's been so much going on in our world, especially in the markets. And, as far as that is concerned, my main focus is with these markets. Today, I saw something that I've never seen before, and the likeness of which I haven't even talked about or heard of since the late 1990s. Now, everyone knows that tomorrow is the final FOMC for this year, for 2022. But ahead of that, this morning we had CPI data that came out. And for those who have been tuned in to me for over a decade now, you've heard me say this before, that on Wall Street, if you have a big enough name and you have deep enough pockets, you can purchase market data, reports, government reports, moments or seconds before it's released to the public. All right. That gives you the opportunity to front run the public. Well, it's no surprise that I want to say since 2009, between 2009 and 2010, somewhere around those parts, it has been a realization that it doesn't matter what reports are coming out. You could trade ahead of them and it really wouldn't matter all that much anyway. And so people often would, because there was no ramifications and repercussions. The time period where we saw such ramifications and repercussions would have been the late 90s and the early 2000s. And what would happen would be moments before the report would come out, that FOMC report would be traded upon up to about 2 minutes before its release. And how you would know this is because you would see the price action explode. And then once the information becomes publicized on your financial news networks like, Fox Business, CNBC, Bloomberg, the price action had already moved. And it was commonplace at this time. Keep in mind, we're talking about the early adoption and infancy of the Globex system in Chicago for trading your S&P futures. All right, Dow, NASDAQ futures. And so it was commonplace to see parabolic, wild fluctuations in price, or to what those in the business would call fast markets. Now, the reason why this is considered as such is because it causes the market to do something it normally would have never done. So, just moments before the announcement would be released to the general public, you would see the Dow on average rally over 600 points instantaneously within 2 minutes. The NASDAQ would follow with a 600 plus move as well within the same amount of time, to about 2 minutes, sometimes instantaneous. And the S&P would rally to about 100 to about plus 110 points. So that's what your market would look like on FOMC days. And as time went on, the surge on the news would start to metamorphose. And we start seeing delayed responses to the news as well as pre-responses to the news. So let's look at the pre-response. So it became customary for markets to rally ahead of the news. So leading up to the day of the announcement of the FOMC, the market would rally to a degree that would equal that 600-point instantaneous rise. And then when the announcement comes out, that move would be faded and you would see the market sell off. All right. That was the pre-announcement. Then we saw the market shift into what is called post-announcement. And this is where you would see a delay. Now, it could fluctuate. All right. There was a wide variety of the delays. Sometimes the announcement would come out and there would be no response in the market. Even minutes leading up to the response, there would be nothing. All right. No movement. Price action is pretty much flatlined. And then 20 minutes after the announcement, still nothing. And then you had periods where the market would not rally ahead of the report, would wait until the report and still not move instantly, but wait about maybe 10 minutes or so, and then a little bit of movement. It's like a gradual thing. But then we will see also there were times where it would be a situation where the market will wait until close to the close, to that 4 o'clock bell before it starts to rally. All right. And those are the kind of delayed rallies we would see. And there was at least once or twice where I can recall where it waited a whole day, and you had a delayed response. The market had to really take time to digest what was said, and you would start to rally the following day, right after the 9:30 opening bell in New York. And then for a time, the market went back to where it used to be, where when that report comes out, you would get that instantaneous response. But between 2010 up until 2021, it didn't matter what was happening. You could place your bets, go long, go short, and you really wouldn't have any ramifications or repercussions as a result of it, because the market would have muted responses. It wouldn't care, basically. But this morning, here on this December the 13th, Tuesday, it's not FOMC day. FOMC day is tomorrow. Tomorrow. Instead, we had CPI data that came out seconds before it was made public. The Dow exploded, positive plus 800 points. Now, to give you an idea of the violence of this, we have a 1,000 point trading range today in the Dow. That's from the low to the top. We have 1,000 point trading range in the March 2023 Dow futures. 1,000 points, which is insane. Insane. Now, the Dow futures is negative 15 points. I want you to wrap your head around. Now we're negative 30 as I'm doing this. Wrap your head around that. This is a type of a whipsaw that is almost never seen. Ever. All right? Ever. Ever. So you rally 1,000 points, then you come crashing down 1,000 points. I want you to hear what I am saying to you. We have a 2,000 point price swing in the Dow, and it's only 24 minutes after noon. 2,000 point move. Think about that. That's almost 1,000 points an hour that the market has been open. Think about that. It's ridiculous. Picture it in your mind. Every 60 minutes, the Dow is going to move more than 500 points, close to 1,000 points, and it'll do it every hour on the hour. Can you imagine the devastation? Well, that's what we're seeing this morning. The Dow has a 2,000 point price swing. I have never seen this before. Ever. Not even the May 6, 2010 flash crash didn't see a 2,000 point swing like that. That is insanity. Ladies and gentlemen, you need to understand a few things. Now, if you missed last night's end of day report, you're going to want to do yourself a favor and check that out after I'm done with this live stream, because we went over the charts. I showed you exactly what was happening on the algo charts and what was going to more than likely continue to happen unless something major happens. Well, so far, as of right this moment of me doing this report, all things being equal, today's rally will still not give you a buy signal. If the market was to close right now at this point, right now, you would still not have a buy signal for tomorrow. All things being equal. Just something to think about and to chew on as this day goes by. So what am I saying? What I am saying is that today's close will more than likely be more important than tomorrow's close. So you have to ask yourself a question: what happened? What really happened to cause the market to move so aggressively, so violently? And not only that, but what is happening? What has happened to cause the market to lose the entire 1,000 point run and now go negative? You have to start asking the right questions to get the right answer. This is what I would call blatant market manipulation. Blatant manipulation. Why do I say blatant? Because it was only a few days ago that we saw a similar action. Do you recall the Fed minutes, where the chairman held a press conference? I cannot remember or recall the last time there was a actual press conference just over the Fed minutes in history. I cannot recall. Normally, it's something that's read by the reporters on the business channels, and it gets no response whatsoever from the market. But this time, they had a dog and pony show. He went out on the in front of the cameras and said what he had to say. Basically, reading everyone a bedtime story. Let me read the minutes to you guys, and that's what they did. And they orchestrated it in a fashion that had the chairman looking calm and in control of the situation and dignified and intelligent. Did you notice the way the lighting was and the background that they had, the backdrop they used from where he was sitting next to the reporter guy? And did you notice the type of response that they had and as they were talking, the way they were talking, sitting with their legs crossed like they were just chilling, laid back, sipping lemonade, shooting, shooting the nonsense about the markets, like and in a tone that made you think, oh, it's nothing to see here. Keep moving. There's nothing wrong with the market. There's nothing wrong with the economy. There's nothing wrong anywhere. It is great. Life is great. The economy is great. The jobs employment situation is great. There is no inflation. Food and energy is volatile anyway. I wouldn't put any stock into it. That is the manner that they were speaking. Very calm, very cool, like very cordial, like they've been best friends for 30 years. And we just so happen to sneak a mic and a hidden camera in there and eavesdrop on their conversation. That is the setup and the backdrop that they wanted to put forward, because they wanted you to be calm about the horrific economic realities. You can only massage numbers so much. You know, the old saying, numbers don't lie. Yeah, but people can make numbers lie. All right. You can create formulae that will give you the kind of outcome that you are looking for. All you have to do is change the variables. And then voila, here's your outcome that you wanted anyway. Why do you think they took food and energy out of their numbers? It's not because, oh, it's so volatile. What do you mean food and energy is volatile? How is food and energy volatile? Are you saying this is Zimbabwe? Are you saying that America has been under hyperinflation for 5 decades and we didn't notice it because food and energy is so volatile? No, they took it out because food and energy is not volatile. Food and energy is consistent because you don't have an economy without it. You don't have a nation without food and energy. You don't have technology without energy and food. Food is the most important aspect of technology, because if the people, the human beings, don't eat, then they won't be alive to run the machines. Food and energy is the golden heart of life. You cannot separate food and energy from life. That's like separating your brain and your heart from your body and still saying you have a functional body. You cannot. You cannot. Food is the heart. The energy is the brain. The heart gives energy to the brain in the form of blood circulation. You cannot have one without the other. You cannot have a viable human existence without a brain or a heart. You have to have both. You can't just say, well, you can live without a heart or you can live without a brain. No, you cannot. And that's what they expect you to believe when it comes to food and energy. Oh, it's no big deal. Food and energy is volatile. No, it is not. It is consistent. And the reality is, food and energy has consistently gone through the roof over the last 5 decades and an extraordinarily clip. You are paying more for that tomato today than you did 5 decades ago. You are paying more to put gas in your car than you did 2 or 3 decades ago. Let that sink in. Food and energy volatile? No. When you use the word volatility, it can be misleading because to the human psyche, when you think volatility, you're thinking up and down like a roller coaster. Today, at this moment, you're at the top of the hill, the incline, and then tomorrow you're at the bottom of the steep drop of the incline, and then wash, rinse, repeat over and over again. That's what you think about volatility, as you should. Volatility is randomness. It's everywhere. It's nowhere and everywhere at once. It's extreme. That is not a fact. The facts is that we have seen hyperinflation that has done so incrementally over the last 5 decades. Everything costs more today than it did 5 decades ago. That's inflation. Dare I say hyperinflation? Again, $100 could buy me a lot more groceries 5 decades ago than it could today. Facts. Just 2 decades ago, I could get more gas with $1 than I could get with $1 today. 2 decades ago, I might have been able to get at least a gallon of gas for that dollar. I remember when gas was 79 cents, 89 cents a gallon. So for $1 could buy you a gallon of gas just 2 decades ago. It can't do it now. It can't do it now. If you go in to the gas station and say, let me get $1 on pump 7, they'll look at you like you are crazy. They say there's nothing we can do for you because you don't have enough money. You can't even get a gallon of gas. If the average cost of a gallon of gas is $3 a gallon today, that is a 300% rise in the cost of a gallon of gasoline just in the last 2 decades. 2 decades. That's right, 2 decades. 300% cost in the price of 1 gallon of gas. And in some jurisdictions, it's even a lot more than that. And that's just for your basic unleaded gas. We're not talking about premium. Same thing goes for diesel. Again, 89 cents a gallon versus over $3 a gallon. You do the math. Is that not hyperinflation or what? How high does the cost of gas need to go for you per gallon before you say, okay, now I have hyperinflation? Does it need to be $17 a gallon, $25 a gallon, $50 a gallon? Where is your cutoff period for measurement? The reality is the banking system in the United States of America is in trouble. big trouble. The more market manipulation I'm observing, the worse off the situation of reality really truly is. I gave you guys the road maps for months now. I'm always hit with the question, can you give us a basis for what you see over the next, 6 months, 12 months, 18 months, whatever? And I give you my long-term analysis. I explained to you in the most recent one what needs to happen. The government is desperate to have a Santa Claus rally. It needs it. It's a seasonal tendency that happens in the markets to the point where it's a self-fulfilling prophecy. The government doesn't really have to do anything. It's just something that happens, especially the last week of the year. They like to end the market on a positive note. It's rare for the last trading day of the year, you see the Dow down, hundreds of points. It's usually somewhere in the green. All right. But the reason that they have now twice tried and failed to cause an artificial rally means that they are more desperate today than they have ever been. You don't turn on the plunge protection team unless the market is in free fall. That's when they come in and shore up the market and give the market a floor. You don't do that when the market is not falling. You only do that when the market is falling. To see the plunge protection team come in early in the morning using the CPI data as a backdrop, cause an effect where they can say, this is the reason why the market's rallying, is a desperate act at the least. And the reason why you should be worried is that today, like then, it has failed. A 2,000 point price swing this morning in the Dow. Last week when when they gave the Fed minutes, it was an 800 point rally. But like then, it didn't hold. The market exploded this morning and it didn't hold. Another thing that shows the desperation of the banking system is the fact that they're trying to go in and close the gap up that was created this morning. You almost never, it's so rare, you can almost say never see the market back and fill to that degree in the same day. You can see it the next day, but you rarely, if ever, see it do it the same day. For the market to have such a gap as to cause the market to back and fill it in the same day, no. Small gaps, you can see that, yes. But ginormous gaps, like for instance, the SPY, the S&P 500 ETF, it closed yesterday at $398.95. Okay. It opened today at $410.22. All right. Let that sink in. All right. The market would need, the SPY would need to drop below 398.95 in order to physically close the gap. And it's on its way to almost doing that right now. The low right now is 399.38. So you're almost there. All right, you're almost there. About $1 or so left to go. I've never seen that. So the SPY closed at 398.95, opened today at 410.22. So you got a $10 gap up in the SPY. only for the market to have fallen now from the intraday high of 410.22 to where it currently is at 463. That's the type of shenanigans we're talking about. All in a last ditch effort to rescue this market. They're so desperate for a Santa Claus rally that they're willing to do whatever it takes, and they don't care if you are looking or not, if you're paying attention or not. They don't care. And to prove it to you, the diamonds, which is the Dow ETF, DIA, has already just now closed the gap. It has now physically closed the gap from this morning. It closed yesterday at $340.62, but then opened today at $348.18. So you had an $8 gap up that is now officially, I can officially say that they have closed the gap today. They actually did it. All right, they did it. Only in the Dow, not the S&P. Not the S&P. They also have now closed the gap in the Russell. The ticker is IWM as in Mary. All right. It closed yesterday at 180.72 and opened today at 185.73. So you had a $5 gap up. And this one has now closed the gap. It is sealed it. All right. We have also officially, looks like we've officially closed the gap that was created on November the 10th in the Russell. All right. Because the market, it closed on the 9th at 174.63 and opened at 181.85 the following day. All right. So you need a pullback to 178.67 in order to close that gap. Okay. That's what you need. And it didn't happen until, let's see here. It didn't happen until 2 days ago. All right. The gap was closed 2 days ago in the Russell from back then. Looking at the NASDAQ 100, the QQQ. So you closed yesterday at 285.58 and opened today at 296.65. All right. That means you need to pull back to 285.64 in order to do that. And it hasn't done it yet. It's trying to, but it hasn't closed that gap yet. And as far as the November the 10th gap, that has not been closed either. In the NASDAQ, no cigar. Russell closed it, but not the NASDAQ 100. No cigar. Going back to the S&P 500, the SPY, has it closed in November the 10th? No, it has not. So the S&P and the NASDAQ have not closed that November the 10th gap. Going back to the diamonds, the DIA, the Dow, and again, in question is the November the 10th gap. All right, so the market needed to pull back to 337.49. That's 337.49. And it looks like, I'm sorry, I take that back. It needs to close below 330.87. So 330.87. And so far that has not happened. So the only one that is closed the November the 10th gap up is the Russell. The Dow, S&P, and NASDAQ have not. So if you add that to the punch bowl today, it should give you a better understanding of where we are. All right? Where we are. I want you to think about it. All right. Now, with this being said, this should show you the desperation that the government is under right now. Their back is against the wall. because they know that all gaps and pointers get reconciled at some point, whether it's 2 days, 2 weeks, 2 months, or 2 years into the future. Those gaps and pointers will be reconciled, and they know it. They know it. It's not something that can be hidden or manipulated. It is a fact of market forces and dynamics. This cannot be sidestepped. So now the question is this: being that the way the market's gapped up, that's the other issue. Let's say we close right where we are right now, or let's say the market falls a little bit more. You don't have a bullish pointer today on the daily chart of the dial, the DIA. No bullish pointer. How about SPY? Because they would use that to say, okay, we have a precedent now to bring the market. Nope, no bullish pointer there either. Not even on the SPY if it closed right where it's at right now. Even the QQQ, no bullish pointer. No bullish pointer whatsoever. Let me explain to you what needs to happen in order to give them precedent to have the PPT push the market further. Are you ready? All right. What they would have to do is they would have to rally this market into the close today. And we would need to take out the intraday highs in the Dow, NASDAQ, S&P, and Russell. Which means since we're now down 31 points in the Dow, it needs to rally back 1,000 points and keep going into the close, which would then take you from a 2,000 point price swing in the Dow to a 3,000 point price swing in the Dow. Let all of this sink in for you. This is where you should start saying the emperor has no clothes, because this is something that is being done right in front of everyone. They can't do it behind the scenes. See, they can do it in the pre-market because no one's watching. People don't usually watch the futures in the overnight or anything like that. They're watching after that bell. That's what they want to see. They want to see what's going on after that 9:30 bell rings. That's what they care about, because that's when the equities can be traded normally. That instead of outside of hours, like extended hours and all that stuff. So that 9:30 bell is paramount. So if they can get things done like they did this morning when the report came out at 8:30, that gave them all the time they needed to do what they needed to do. But in doing so, it messed up the opening for Wall Street. The equities had a terrible open because of it. And now you don't even have a bullish pointer. So if the market sells off today, it does not have a bullish pointer that would attract prices at some point in the future. Right now, what the markets are gunning for is closing these gaps from November the 10th, because it's important. You can't really say you have a precedent now for a incredible bear market rally when you still have unreconciled gaps and pointers. So being that the Russell has already fulfilled the November the 10th, it's already sealed it, it backfilled it. Technically speaking, the Russell can rally from here. You can actually now stage a bear market rally in the Russell without problem, because you've closed the gap. The gap's closed. It's done. It's a done deal. But what about the Dow, S&P, and NASDAQ? They cannot have a sustainable bear market rally without reconciliation. They got to reconcile November the 10th's gap in order to have a sustained bear market rally that can even have hopes of becoming back and turning itself back into a bull market altogether. So this is paramount what we're seeing today. Tomorrow is going to be just as important, but today's close is going to be extremely important because it sets the basis for tomorrow. Today has done so much. Today has also made it almost impossible for the market to rally tomorrow, regardless of what the Fed said. I don't care if the Fed tomorrow says we're not raising interest rates 50 basis points or even a quarter. We're going to lower them a quarter or 50 basis. They could do some kind of surprise and the market wouldn't do nothing about it because it can't. And them trying to manipulate and try to create an artificial rally instead of allowing it to happen organically like it would eventually do anyway, they're trying to force the hand of the market. And in doing so, they've almost ensured that tomorrow's rally cannot be sustainable even if we get a rally tomorrow. As a matter of fact, they've opened the door now for a tremendous sell-off between right now and after the announcement tomorrow. They've all but opened the door wide open. As a matter of fact, they didn't just swing the door open for a crash, if you will. They've taken the door off the hinges and threw it away. There is no door. It's just wide open access now to the house. No front door. Blew the windows out too. There's nothing from stopping ingress or egress in this situation. People can go in and out at will. There's no barrier to prevent them. Will the markets close the gaps today? Can the S&P, NASDAQ, and Dow catch up with the Russell and close the November the 10th gap and do it today? Because mark my words, you're not going to get a sustained bear market Santa Claus rally without it. Sure, I'm not saying the market can't or won't rally unless November the 10th is taken care of first. What I'm saying is it won't be sustained. I don't care how high it goes. I don't care if the Dow explodes between now and Christmas to Dow 50,000. It's not going to stay there. It's going to come crashing right back down to that November the 10th gap. So technically speaking, if you are really serious about having a bear market rally that has hopes of turning into a full-fledged bull market again, you're going to have to reconcile November the 10th sooner rather than later. Now, eventually, all markets rally and all markets crash. That is inevitable. Markets go up, markets go down. All right? Markets consolidate, then they trend, then they consolidate, then they trend again. That's how it goes. So they have set a dangerous precedent. And what you saw today is evidence of a scared Federal Reserve. The banks are afraid. They are shook. This is Shook Ones Part 3. All right? The banking mob deep. Shook Ones Part 3. What are you going to do? I tell you what they're going to do. They're going to hope that they've convinced the Wall Street firms to come in and bail out the Federal Reserve. Because now the Federal Reserve needs to be bailed out. Because remember, the market is their face. Okay? I'll paint the picture for you. The economy is supposed to be an attractive woman. Okay? The economy is an attractive woman, a young, attractive woman. But the stock market is the woman's face. All right? And the Federal Reserve is the beautician. Their job is to properly groom and maintain the attractive female. Okay? So the Wall Street is the face. The stock market is the face of the pretty woman. Now, they need for this pretty face to remain pretty. At no time can they allow the face of the economy, which is Wall Street, to start looking homely and unattractive like the sea hag from Popeye. Or to quote My man Freddie Fox, aka Bumpy Knuckles. You got the lady looking like a smoked out Daffy Duck. They can't have that. All right. The Fed cannot afford that. They can't have that. You can't have the face of the US economy looking like a smoked out Daffy Duck. You can't. So what do? They have to enlist some help here. All right. The beautician is saying, look, man, I got other things to deal with. All right. I need help. You come over here, Treasury, and you wash the lady's hair, and then you over here, you can come over here. I need you to put conditioner in it, and you start enlisting help. So they'll say Goldman Sachs, J.P. Morgan, get over here. Morgan Stanley, get over here. Get over here. Or they'll say, yo, Warren Buffett, come here. I need to holler at you real quick. I need a bailout. Do something. Now, let's not forget that this happened already. We saw this happen in 2008. Don't forget, Warren Buffett single-handedly bailed out Goldman Sachs. Oh, how soon we forget. How soon we forget. Yeah. For those of you that have forgotten that happened. That is a fact of history. So they need help now to keep the pretty woman looking attractive, because that's her number one asset. The economy, the U.S. economy, is our woman in this scenario, and her biggest attractive asset is her face, which is the stock market. All right, that's her biggest asset, and she has to use that to her benefit. All right, while she's still young and sexy, she needs to stay that way. If her hair starts falling out, we have a problem. If her face gets scratched or cut, we have a problem. Because then no one's going to want to holler at her. No big Wall Street funds are going to want to mess with her. No sovereign wealth funds are going to want to touch her with a 10-foot pole. They're not going to want to do anything with her except avoid her and start hollering at her sister, real estate. They start hollering at the sister, real estate. But see, what you don't know is that her sister, real estate, has been hitting the pipe lately. And she's starting to show signs of cracks in her face. You know, her teeth are falling out from smoking all the crystal meth. So now real estate is starting to look homely. So the two sisters now, stock market and real estate, are starting to look real bad. And people are starting to notice. They're saying, man, have you seen the two sisters, man, lately? Nah, man, what's up? I've been out of town, man. Man, I'm telling you, man, real estate, man, Shorty's teeth is falling out, man. She don't look right. I think she on that pipe, man. Word? What about her other sister? Her other sister is banging. Oh, you talking about stock market? Yeah, stock market. How's she looking? Man, last I heard, man, she got mugged on her way home from work, and dude cut her face. Her face got cut. Oh, you serious? That beautiful girl got her face cut? Yeah, man. And that's what we see what's happening right now. The cracks are starting to show. All right. Come to find out, it was a mask the whole time. So really the face didn't get cut. It was the mask that they were wearing that got cut. You just found out that these twin sisters have been wearing masks. And the long, pretty hair you thought they had, no, man, those are weaves, extensions, and wigs. Come to find out, both of these sisters are bald-headed. They don't have no hair. They're not so fly as you thought they were. They got flaws that are starting to show. So guess what? Now their job is in jeopardy. Their job is in jeopardy. See, these two sisters were models, big-time models. And they made their career off of their looks. So now that their looks are starting to fade, they're getting dropped from the modeling agency. Yeah, getting dropped from the modeling agency. Funds don't want to mess with them no more. They don't want to invest no more. And that's what we're seeing here, ladies and gentlemen. Desperate acts of desperate men. And you need to take notice. Do not Panic. The worst thing you can do is panic. All right. If you find yourself on the right side of the market and something crazy happens, do not panic. You do not have to push the button. Let the market settle down and sort itself out. And then you make your moves. That's why you got to have these pulse waves, ladies and gentlemen, so you know how to navigate these markets. I'm telling you, lately it has been chaotic because the government is starting to intervene. Now, make no mistake, we live in an interventionist system. The market is based on government intervention, Federal Reserve intervention. Now, there needs to be some level of policing, I'll grant you that, but not to the point of the manipulation aspect because you want a particular outcome, so you're willing to break the system in order to create it. And that's what you're seeing. You're seeing that. You're starting to see that. But you're starting to see something else too. The US banking system is extremely fragile right now. I don't care what they say about their stress tests, their so called stress tests. It's all a lie, smoke and mirrors. They're afraid, and I can show you why they're afraid. Because they are doing everything in their power to make the crypto industry look bad. They will have you to believe that the only people buying Bitcoin is mafia tied people. Bitcoin has mafia ties. The mob owns the Bitcoin. Only drug dealers and pimps and hoes operate in the market in the crypto space. Crypto markets are for gangsters and thieves and murderers and drug dealers and cartel Colombians and et cetera, et cetera. That's what they will have you to believe in the media if you listen to the media. No honest person would ever dare dibble and dabble in the crypto space because crypto isn't money. Crypto isn't currency. Crypto isn't an asset, according to the mainstream media. Well, if crypto is not an asset, if crypto is not an investment vehicle, if crypto is not money or an asset or a currency or have any intrinsic value whatsoever, then why are the global governing bodies so quick to tax it? If it's not revenue, then why are you taxing it? Why are you tripping over yourself backwards trying to create legislation to tax crypto? Why are you secretly behind closed rooms funneling billions and billions of dollars to create your own government blockchain and your own government digital currencies? If crypto is so bad and so demonic and so gangster, then why, Mr. Government, are you taxing it? And why, government, are you doing the same thing in secret in the background? These are questions that have to be asked and answered. And that's what's up. If it's not money, if it's not an asset, then how are you taxing it? If it's not a commodity, if it's nothing, then why are you taxing it? I don't understand. If it's not money, how can you tax something that has no intrinsic value? How can you tax something that has no monetary value? You're saying that crypto is nothing. Nothing. You can't tax nothing. You can't tax speech. The words that are coming out of my mouth can't be taxed. The air that I'm breathing can't be taxed. You see what I'm saying? You can't tax my heartbeat, beats per minute. You can't tax it. what are we doing here? And people need to ask themselves this question. What are we doing here? And what's really going on with the US banking system? Why are they so bent on coming out with this digital money? Why are they so bent on controlling everyone and wanting to control every aspect and every fiber of your being? Why is the government trying to play God? Why? Why? You got to ask yourself these questions. I'm telling you, we're at a critical juncture here, and they would never tell you this. They will never admit this because they don't want to lose control. If people really, really understood what I am saying to you today, there will be riots in the street already, like you've never seen before. But you're not ever going to see that. You're never going to see that because they have so already seized control of everything. They control the press. They control the media. They control the currency. They control you. You can't do anything in the United States without the government's authorization and approval. Nothing. You can't do nothing. You can't even work without their permission. You can't travel without their permission. You can't open a business without their permission. You can't drive a car without their permission. Everything you do, you need permission. So, how is it that you still consider yourself to be free? You're not free. You're free to obey, and that's it, and to not question. You are not free. You cannot do whatever you want to do as long as it doesn't infringe upon another person's property or rights. As long as you're not harming another person's person or property or infringing upon their rights, you should be free as an adult to do whatever you want. Do whatever you want. As long as you're not infringing upon another person's property or person or rights. You have a right to do it. And that's what it is. Facts. But no, your government says, no, you do not have a right to do that. As a matter of fact, as your government, we give you privileges. See, they don't want to say rights. They want to say privileges. Because, see, rights are not given to you by your government. Rights are given to you by the fact that you are a living, breathing human being. All right, that's intrinsic with you being a human being. But privileges, on the other hand, is something that is given to you. And by right, if something is given to you, therefore it can also be taken away from you. So it is not your rights, it's not human rights that is at stake. It is your privileges that are at stake. See, what you have been going around thinking all these years that were your rights, it's not your rights, it's your privileges. You thought the Bill of Rights was your rights. The Bill of Rights, it should have been called the Bill of Privileges. Because you need permission to do everything in your country, the US of A. You need permission. You can't do anything. There's nothing you can name that you can do freely without permission from the government. And this is how it is. This is how it is. They've already made it so that you can't buy anything of value with cash. No, because then they'll accuse you of money laundering. You can't buy anything of value with cash. If you doubt me, go ahead and try it and see what happens. You'll either be told, no, I can't accept that, or someone will be taking you by the meat of your forearm and saying, come with me. You're being apprehended. You're being arrested. So now that you know that you're not living in a quote unquote free society, but you're living in a society where your government has given you privileges instead of rights. One more thing to think about. See, a lot of people think, well, I don't have any debt. I'm debt free. I live free and clear. I owe no man nothing. My government can't do nothing to me. I don't owe them nothing. Therefore, they can't take nothing away from me. But you're wrong again. If you're a homeowner in the United States of America, you do not own your home. What do I mean by that? You don't own the land on your home. The government leases it to you in the form of real estate property taxes. If you fail to pay your real estate property taxes, then you will lose said real estate and or property. Yes. And you have to pay this in perpetuity. Long after your house is paid for, even if you bought your house with cash, you still don't own it. Not only can the government come and take it away from you if you fail to pay the property taxes on it, they can come and take it from you even if you do pay your property taxes. They can hit you with that eminent domain and say, well, we need your land because we're gonna put a park there for children to play on. So we need you out of your house. We need you to move right away. Only to find out afterwards that the state didn't need your property at all. A developer needed it and was willing to pay a premium price for it. So the government did the company's bidding and gave them your property. Yep. That is what we call in the U.S. corruption. Corruption. It is what it is. So let all this sink in today. Everything that you have seen in these past few weeks has been mind-boggling, unprecedented. We have never seen this before. Where do we go from here? Well, I'll repeat it. The market needs to reconcile the November the 10th gap up before you can have a sustained bear market Santa Claus rally. If you don't, and they are able to succeed in starting the rally without it, the market will come crashing down, and where the low point will be because it's going to be that gap. So no matter how high it goes from here, it's going to come crashing down to that gap. You can mark my words on that. Gaps are like pointers. They are reconciled eventually. I think the longest I've seen a gap and or pointer go without being reconciled has been, I think, a year, 12 months or a year, something like that. But eventually they all get reconciled. It's just how it is. And unless this happens, I'm not saying the market can't rally or that it won't rally. It could rally this afternoon. It could go back up and be plus 800. Easy. It's not hard to do. But what I'm saying is it won't be sustained. At some point, it's going to come crashing down. The higher it goes, the lower it's going to fall to correspond to that November the 10th gap. All right? That has to happen. Now, here's the problem with the gap situation or the gap theory. I never said that once the market comes down and closes the gap, that it's going to stop and reverse and then, resume a rally. No. See, there's a problem with the November the 10th gap. Why do you think it's taking longer for the market to reconcile it? And the other three indices are acting like they don't want no smoke with that gap. Because that gap is located at what we call a price vortex, where chances are, if they do back and fill, it's going to trigger an avalanche of selling. and cause the bots to go insanely out of control. And then from that point, it's only a short distance to the 52-week lows. That's why the other indices are dragging their feet and doing everything in their power to not close that gap. The Russell did it with no problem, but the rest of the indices are struggling. So now you need to understand why that is and how it happened. See, orders weren't parked at the gap for the Russell because the Russell's really not a main index that the majority of the players like to play at. They like to go to that NASDAQ. They like to go to that S&P, and the older institutions like to mess with that Dow. But the problem is the reason why they didn't reconcile with the Russell, which they could have easily have done, is because they know that's a circuit breaker point. And there's a lot of selling that is waiting to happen at those gaps. That's why you've seen the market do what it's doing. They're trying to keep it up, elevated enough away from those gaps, from that November the 10th gap. Because I'm telling you, there is an avalanche of sell orders there, and that's why they are trying to prevent going there for as long as possible. Delay it as long as possible. Because they are not confident that they'll be able to take the market back up once the markets close those gaps, because of it will trigger selling by the bots, and they know it. It's probably $1 billion worth of orders waiting at those gaps to sell short, and they can't have it. That's why they're delaying this, delaying the inevitable, because there's a high probability that the market will not be able to get back up. I'm trying to put y'all up on game with the price action. So these last 2 weeks have been unusual. All right, unusual. And this is the reason why. So now you know why the market has been behaving the way it's been behaving. It's because it's scared. It knows what's coming. So they need a Santa Claus rally. See, it's different in past years. You know, from going back to 2019 and before then, it was assumed that it was going to happen, and it did. It was a self-fulfilling prophecy. We always had somewhat of a little Santa Claus rally, right? But this time it's different because the banks are in trouble. The economy is in trouble. Serious trouble. And they know that it's not going to happen organically this year. So they have to try to manufacture the Santa Claus rally. And they're concerned that they may fail. That is a scary reality to think about. They are afraid that they may not be able to get that Santa Claus rally this year. And if that happens, you know what could break loose. The stuff could really hit the fan. And they know that the next time it does, it's going to be violent, and it's going to be scary, and it's going to cause some people to rethink their life. What am I doing here? What am I really doing here? What's going on? So I said my piece. I had to come on here today to tell you what I've been seeing. And today was the last straw. When I saw what happened this morning, that was the last straw. I had to say something. I couldn't keep quiet no more. I couldn't. I had to tell y'all what time it is. I had to tell you what was going on so that you guys could be well-informed and make well-informed decisions as to what it is you need to be doing or not doing. So one of the tenets of trading is never panic. You never panic. All right. When the market's moving against you, you never panic. You got to stay solid. If the market is going to truly turn organically from a bearish to a bullish perspective, and you're short the market, fine, let it happen. See, a lot of people are afraid of letting things happen because they think that if they let it happen, that they won't survive or they just can't live with that. And you have to break yourself out of that mentality because a lot of people do the wrong things at the wrong times. All right. So you need to understand that even if you find yourself on a losing side initially, once the market matures and decides and picks a direction, you make back everything that you lost and then some. People miss out on getting themselves back into the black because they panic. They see the market up 800, like, oh no, I'm missing a rally. And they don't stop to think, uh, 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 I just got played. Think of someone this morning who woke up not knowing what was happening, saw the Dow up 800 and pushed the buy button. If you push the buy button this morning, you're down right now about 1,000 points in the Dow. You're upside down because you pushed the button, because you panicked. See what I'm saying? You don't ever, ever do that. Don't lose your cool. Even if it's situations that you cannot control, like something organic that just happened that you could have never have known was going to happen, it's not your fault. You got to hang in there. All right. Always follow the rules and you will be fine in the long run. Investing and trading is about the long game, not the short game. So many people fail in this business because they're too short-term minded. They don't understand the dynamics and the forces that are at play. And so they get run over. Getting your face ripped off is par for the course. At some point, as an investor, as a trader, at some point you're going to get your face ripped off, no matter what you do. And that comes with the territory. But see, if you continue to do that which is right, you're going to make all that back in spades. All right? That's a fact. It's a fact. If you doubt it, after this video, why don't you go look at my archive videos going back over 10 years here on YouTube and see for yourself. All of my videos are still up. I've never taken them down, win, lose, or draw. All of them are there. And you tell me, would I still be doing this after all these years if it wasn't true and if it wasn't real? Would there not be people uploading video content exposing me for being a liar? You need to ask yourself that question. Go look and see if you don't believe me. Go see if I know what I'm talking about. I've never taken down any of those videos. All of my market report videos are up for anyone to peruse. I tell you these things because I'm trying to help as many people as I can. I don't know what's coming next year. I know a lot of things are happening fast. We don't know, are they going to shut down social media altogether? We know Elon Musk is trying to do something with Twitter, but we don't know if it's going to succeed or not. They could take down all of our channels, all of our content. All right. You need to understand that. So that's why, I do what I can as long as I can until, they take us off the air. Now, if you think they will never take you off the air, I just have 2 words for you. Alex Jones. All right. You can be taken off the air. They can kick you off social media. All right. So you need to understand it. Don't think it can't happen to you. Yes, it can happen to you. It can happen to anybody. Nobody's immune unless you own the social media platforms. So just keep that in the back of your head. The question is, would mining stocks be good when it all crashes? That would depend. Excuse me. That's a good question, though, but it would depend. All right, so let's look at it from a couple different points. So first of all, when we talk about mining stocks out of all other securities are a rare breed in and of themselves. I'll explain. Okay, so mining stocks are similar to the materials that they mine, like gold and silver. Gold and silver is also unique because gold and silver are both commodities. All right. They are, limited, scarce resources with alternative purposes and uses. But they're also considered money going back 5,000 years. Sometimes gold and silver act like money and therefore will start to trade like currencies. Then there are times where they revert back to being more of a commodity. And so then they're going to start trading like commodities. What will give you a window of knowledge to know which is which or which market force is prevailing at the moment? Well, when it comes to gold and silver, for example, how will you know if gold and silver is acting like a commodity today or a currency? It's very simple. If gold and silver is acting like a commodity, then it's going to depend a lot on the US dollar index. If the US dollar index is positive, then commodities will be negative. All right? And that's just a fact. It's just how it is. All right? Dollar bullish, commodities bearish. Commodities have an inverse relationship to the US dollar. Always remember that. And that's because of the import export factors. So you have to take that into consideration as well. Sort of like bonds and rates. Rates move inversely to bond prices. So if bond prices are rallying today, then yields are going to be down and vice versa. If yields are up today, that means the bond price is down. So gold and silver are the same way. All right. If the dollar is strong, they're going to be weak if they're acting like commodities. All right. So that's all you need to remember. Strong dollar, weak commodities. Weak dollar, strong commodities. Okay. However, if gold and silver has appeared to decouple from that reality, that means they're acting more like a currency at that point and acting like money. So they're going to move according to what's going on in the Forex market. So if the euro is rallying, then guess what? Gold and silver is going to rally right along with it because they're acting like a currency against the dollar at that point. Very interesting price dynamics when you're talking about, mining stocks and the things that they mine. Now, the reason why mining stocks are also a rare bird because, first of all, their share price is going to be affected by number one, the price of the metals that they're mining. So if you're talking about a gold miner, silver miners, well, obviously, if gold and silver is in a strong bull market, that should help to lift the mining stocks prices. All right, share prices. However, mining stocks are also affected by everything else that stocks in general are affected by as well. So if gold stocks and silver stocks are not catching a bid from what's happening in the actual metals themselves, then they're going to be forced to obey the other forces such as earnings and things of that nature. All right, so that's what makes mining stocks a little bit of a rare bird. All right, so they're affected by two different forces: regular stock forces as well as commodities forces. So it just depends on, like I say, what's happening when everything's crashing. Now, if gold and silver is crashing with it, then that means that if the miners are going to rally at all, they're going to be doing it independent of the commodities that they mine themselves. So it is a catch 22 in a way. So you have to look at it from that perspective as well. I know it's a lot to take in today. It's a lot to take in. But that's why I do these, because a lot needs to be said and addressed, and this is the best platform to do it. Yeah, like I said, it's a banking issue. We're having a banking situation right now. Block 5 filed for bankruptcy, and Binance is limiting withdrawals. Yes. Yes. It's a banking issue. And let's not forget, too, we got to put on our conspiratorial hats as well. We can't be ignorant of what's happening. You always have to follow the money and then also ask yourself who benefits? Who benefits when we're talking about these things? Isn't it convenient that you're having all these problems in the crypto space while the government is secretly building out its own crypto platforms, its own blockchain technology? Isn't this interesting? See, who benefits? The government benefits. The central banks benefit, because then they get to come in and ride on the white horse and become the saviors and say, we're here to rescue all you crypto people. We have our own thing we have over here. It's safe. We'll give you this perk and that perk if you come over here and open an account. We got you covered. You don't have to be outside in the cold alone anymore. You can come inside from the cold. Uncle Sam will take care of you. You're already starting to see U.S. brokerages offering crypto trading now. All right. So it's very important that you acknowledge that and take a look at that. Who benefits? Always ask yourself the question, who is benefiting in this situation? And it will be the central banks. Because if they can, demify the crypto markets right now, which are decentralized, then they can make the case for centralization. Matter of fact, if they do a really good job of it, they can have you begging for centralized crypto. Because they'll say, see how well our centralized markets operate? We don't have those problems. Look how nice and beautiful it is over here. We have better weather than you do. It's sunny right now. Our weather maintains 75 degrees 12 months out of the year. We only get this much rain. It's just beautiful here. Don't you want to come in from outside the cold? You live in a frozen tundra called the crypto space. It's freezing where you are. The temperatures are brutal. You got nightmarish blizzard-like conditions almost 365 days out of the year. Don't you want to come over here where it's nice and sunny? All right, that's what they're hitting you with. It's always sunny in California. Or like the one hit show, It's Always Sunny in Philadelphia. Show is absolutely hilarious. But you get what I'm saying. It's always sunny where they are. And they want to invite you. They want to say, come on in off the cold. Why are you out there like that? You don't have to be out there like that. You know, we got you. We're going to take care of you. Now come on in out the rain. And that's what they're doing. They're trying to get you to have a sour taste in your mouth. They want you to exit the crypto markets. They want to, that's why you've been seeing exchange after exchange go belly up. You're looking at all this fraud. Now they're trying to say that your boy is guilty of $8 billion in losses. I don't know if they're going to say it's commingling of funds or misappropriation or manipulation and outright fraud, theft, all that stuff. Commingling of assets with customer funds, blah, blah, blah. We've seen this before. We've seen it with the Bernie Madoff. We've seen it with MF Global and John Corzine. We've seen all that. This is something that keeps on happening. And it always happens when it's more convenient for the banking system. Have you noticed that? They always come out on top no matter what. Always. And that's who's going to win here. The winner is going to be the U.S. banking system. Because they're going to get all these people to come in out the cold and come on over to the KYC department, and they'll just fade into oblivion. The original crypto space will just fade into oblivion because people, they won't want to deal with it anymore. They won't want to conduct business because of the bad sour taste they have in their mouth. Man, Binance is limiting my cash withdrawals, or I can't get my money out. Or I had a lot of money with Slim, and now I can't get my money's gone. I can't get my money. They're telling me my money's gone. You do that to enough people enough times, and it will put a sour taste in people's mouth. People will start leaving the crypto industry in droves to go over to the centralized locations where their money is safe, where they're not going to be told you can't access your money. That's what's happening here, folks. You don't have to be confused about the subject. It's happening. All right? It is happening. We have arrived here. All right? Doesn't matter how we got here. We're here now. And the people who are benefiting, the state benefits. The people don't. They're scared. And they are panicking because they think they have to make something happen or it won't happen organically. So we're going to watch and see how this plays out. Like I said, today's close is going to be extremely important. And tomorrow's FOMC is also going to be very dire, very important. If they're going to be able to get a rally out of it, it'll come from that alone. So we'll see if they're successful or not. But remember what I said. At some point, they're going to have to reconcile the November the 10th gap. The longer it takes them to do that, the worse the sell-off is going to be. And the odds go out the window of the market being able to recuperate after the pullback, after the correction. So that's why I keep harping on it, because it's of utmost importance. All right. I'm all talked out, man. That's all I got. I just had to come here and say it. I just needed y'all to hear it. I had to put it into perspective for you so you can see what we're dealing with. And now you know what we're dealing with. It's not kosher. It's not kosher at all. There's a lot of nefarious things going on behind the scenes. So with that being said, remember, smash that like button for me. Hook me up. A lot of people aren't seeing any of my content because I've been marginalized on YouTube. My channel has not grown. It hasn't moved and budged an inch in a long time. So, you know how that goes. So in order for people to have my videos beat their algorithm and get noticed and get recommended, the only way that happens is with the likes. At least that's what they say. But remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.